Brad Williams, Frugal Finance, investing. There are a lot of different products out there that sometimes makes it a challenge as to which one to pick. In this particular video, I'm going to briefly talk about closed-end funds. These have been around for a long time. They're not as popular as they used to be, but I'm just going to give you an overview and then you can make a decision if closed-end funds are something that appeals to you. Closed-end funds. A closed-end fund, legally known as a closed-end investment company, is one of three types of investment companies. The two other types of investment companies are open-ended funds, usually mutual funds, and unit investment trusts. Exchange-traded funds are generally also structured as open-ended funds, but can be structured as unit investment trusts as well. A closed-end fund invests the money raised in its initial public offering in stocks, bonds, money market instruments, and/or other securities. Here are some of the traditional and distinguished characteristics of closed-end funds. A closed-end fund generally does not continuously offer its shares for sale, but instead sells a fixed number of shares at one time. After its initial public offering, the fund typically trades on a market, such as the New York Stock Exchange or the NASDAQ market. The price of closed-end fund shares that trade on a secondary market after their initial public offering is determined by the market and may be greater or less than the share's net asset value. Shares that sell at a price higher than the net asset value are said to be sold at a premium, and shares that sell at a price lower than the net asset value are said to be sold at a discount. A closed-end fund generally is not required to buy its shares back from investors upon request. That is, closed-end fund shares generally are not redeemable. In addition, they are allowed to hold a greater percentage of illiquid securities in their investment portfolios than mutual funds are. An illiquid security generally is considered to be a security that cannot be sold within 7 days at the approximate price used by the fund in determining net asset value. Closed-end funds are registered with the Securities Exchange Commission and subject to SEC regulations. In addition, the investment portfolio of closed-end funds typically are managed by separate entities known as investment advisors that are registered with the SEC. Closed-end funds typically pay distributions on a monthly or quarterly basis. These distributions can include income generated by the fund, interest income, dividends or capital gains, or a return of principal capital. A return of principal capital reduces the size of the fund's assets. Closed-end funds are required to send a written notice called a 19A notice whenever distributions include a return of capital. There are many varieties of closed-end funds. Each may have different investment objectives, strategies, and investment portfolios. They can be subject to different risks, volatility, and fees and expenses. Fees reduce returns on fund investments and are an important factor that investors should consider when buying shares. You should carefully read all of a fund's available information, including its prospectus and most recent shareholder report before purchasing fund shares. Comment if you don't understand what a closed-end fund is. When you start your evaluation of closed-end funds, make sure you understand the portfolio. Make sure you understand the fees. Make sure you understand timelines if there's any callability to this particular investment. Comment if you have any questions. Brad Williams, Frugal Finance. Thanks for watching. Hope that helped.